Today, let's talk about the market rally. All the charts we'll be using today are through Thursday, November 2nd. So we first started discussing the possibility of a bounce back last Friday on October 27th in this video entitled Looking for a Bid. And we went through a checklist of things we needed to see for a bounce to arrive. And so then after Monday's 1% advance, the bounce, we're talking about what we had to see next, biggest thing being upside follow through. So we'll have links to both of these videos at the end of the piece here. And so in terms of upside follow through, I'm pretty sure this guarantees that we have one at this point, right? We have a 4-day move of nearly 5%, which compared to the previous two, of course, is much more substantial. And so looking back toward the beginning of the year, we had those winning streaks of at least four of them, and each time it was higher 2 weeks later. The ones that occurred since then, of course, the bottom has dropped out each time with support taken out. Now we have a little more room to work with at this point. So measuring them, again, through Thursday, up about 5% using the intraday low to most recent high, now higher than the Friday morning. So bigger than both of the attempts in October and August into September as well. Now, this one did extend almost 5%, but it took 11 trading days to get there. We're there just about half the time. So much different feel, much bigger burst of buying compared to back then, which is something that we have to take very seriously. And so looking at this more closely, we've had now 3 1% advances for the week, 3 and 4 days, which is something we haven't seen since the end of May, early June. Recall that one of the biggest breakouts, or the biggest breakout of a pattern we had all year, came right on May 26th, which then extended higher into June. And then we know that the best part of this year resulted from that point. Looking at this, of course, from a consecutive 1% advance standpoint, we've had 2 of them in a row now, the first time again since June 1st and June 2nd, which then led to another number of weeks of pretty mature, consistent price action. Now, we haven't had 3 straight 1% advances since January 31st to February 2nd. Now, coincidence or not, on February 2nd, Apple reported numbers. And then, of course, we fell apart until the middle of March. As we know, Apple reported last evening, and so far hasn't been too well received, even though the market has been rallying without it. So just keep that in the back of our minds, if and when the next pullback arrives from here. And so we talk a lot about the need to see actually a fewer amount of 1% advances and declines to get more comfortable with the uptrend, because as we know, it's a key characteristic of how breakouts work. You want to see a breakout through an important resistance zone, and the best case scenario is to have that prior resistance zone, that breakout area, hold and extend higher. That can only happen when volatility is low, but you need to see a burst of buying like we just had sometimes to shake momentum and change it from negative to positive. And whether that's short covering, FOMO, or some other kind of market force, we've seen that numerous times at key market lows, which we'll talk about here, the last few of them. Now, of course, 2020, and so we point to October 13th, 2022, we know the market turned there, right? Very distinct. We've been making higher lows ever since. But you can't detect any change looking at the rate of change panel here. We had an equal amount of 1% declines and gains all along the way. Again, this only changed as second quarter developed. And so we had to shift momentum in that sense there. Of course, COVID lows, same type of thing, on the way down 35%, 6 weeks, historic. As things turned from the March low here, the big move stayed with us for weeks. And we know that they stayed historically high throughout the entire time, but it got less and less as we went on and into 2021 when the more consistent uptrend took hold. 2018-19, you remember how things fell apart in the fourth quarter of that year. And again, turned on a dime on December 26th, right after that, where we had this historic rally, historic positive reversal, which then really changed things. And then the uptrend began. And we can see how we still had to deal with some pullbacks along the way in May and August. And then that's when eventually we got to, again, very consistent uptrend to end the year. And then 2016, we actually pointed two instances here. Number one was back in the actual lows here from January and February. Again, a lot of back and forth movement up to that point. Things extended. And then right around the election, right? Not as severe as here, but we can tell that things really changed. And it changed as the market started to rally strongly at first, which then ended up leading to the least volatile uptrend in history in 2017. So all of these also have one more thing in common, and is that it turned a potential bearish pattern into an uptrend. So it negated a big bearish formation here. And of course, that's what we're trying to do again right now. This is the third attempt to trying to nullify this big bearish pattern. We know in August it never broke. And then September it did again, and then in October. So each time it's made, right, lower lows, but still haven't gotten to this target here. And so if it closes above 43.30 again Friday, this would be officially broken, but no one's going to have too much confidence yet. It's because we're still trying to close back above 4,400, finally get a higher high. But again, most importantly, from our perspective, we need to do something differently with this. We know that this pace is not going to continue, right? The hope is that momentum has shifted now, and that will cause buyers to be willing to then put in a bid the next time we have a pullback that is above the most recent low, and then again, take the next step, form a bullish pattern, have that breakout, so forth and so on. So that's what we're looking for next. Again, all the videos talked about from the beginning are here. Don't forget to check them out and subscribe, and talk to you next time. Thank you.